As we look ahead to 2026, many investors are preparing for what experts are calling a cool down in the stock market. After years of rapid growth and high volatility, the market is expected to stabilize with slower but steady returns. In such an environment, dividend stocks become especially attractive. They offer consistent income, even when stock prices aren't soaring. In this video, we'll explore the top 3 dividend stocks that are well positioned to thrive during the 2026 cool down. Whether you're a seasoned investor or just starting out, these picks could help you build a more resilient portfolio. Dividend stocks are shares in companies that regularly return a portion of their profits to shareholders. During periods of market uncertainty or slow growth, these payouts can provide a reliable source of income. Unlike growth stocks, which rely on price appreciation, dividend stocks reward you simply for holding them. This makes them a popular choice for investors seeking stability and passive income. In the 2026 cool down, focusing on dividends can help offset lower capital gains and keep your investment goals on track. Choosing the right dividend stocks isn't just about picking the highest yield. It's important to look for companies with a strong track record of paying and growing their dividends, solid financial health, and a business model that can withstand economic shifts. For our top 3 picks, we focused on companies with sustainable payout ratios, consistent earnings, and a history of weathering market downturns. This approach helps ensure that your dividend income remains steady, even if the broader market slows down. First pick is a leading utility company known for its dependable dividends. Utilities often perform well during market cool downs because they provide essential services like electricity and water, which people need regardless of economic conditions. This company has a long history of paying dividends and regularly increases its payout. Its stable cash flow and regulated business model make it a safe harbor for investors seeking steady income in uncertain times. Next up is a major player in the consumer staples sector. Companies in this industry sell everyday products like food, beverages, and household goods, which tend to see steady demand regardless of the economy. This particular company boasts a robust dividend yield and a strong commitment to returning value to shareholders. Its global reach and diverse product portfolio help it maintain profitability, making it a solid choice for dividend investors during a market cool down. Third pick is a telecommunications giant with a reputation for generous dividends. Telecom companies provide critical infrastructure for communication, making them resilient even when the economy slows. This company has consistently paid and increased its dividends over the years. With a large customer base and ongoing investments in technology, it remains well positioned to deliver steady returns to shareholders, even in a cooling market. Dividend growth is a key factor to consider when selecting stocks for long-term income. Companies that regularly increase their dividends demonstrate financial strength and a commitment to rewarding shareholders. Over time, rising dividends can help offset inflation and boost your total returns. In the context of a market cool down, focusing on dividend growth can provide a sense of security and help your portfolio keep pace with changing economic conditions. Even the best dividend stocks come with risks. It's important to diversify your holdings and avoid putting all your eggs in one basket. By spreading your investments across different sectors, you can reduce the impact of any single company's performance on your overall portfolio. Additionally, keep an eye on payout ratios and debt levels, as companies that overextend themselves may struggle to maintain dividends during tough times. One powerful strategy for building wealth with dividend stocks is to reinvest your dividends. Instead of taking the cash, you use the payouts to buy more shares. Over time, this compounding effect can significantly increase your investment returns. Many brokerages offer automatic dividend reinvestment plans, making it easy to grow your holdings without extra effort. This approach is especially effective during periods of slow market growth, like the anticipated 2026 cool down. Dividends can have different tax implications depending on your country and account type. In some cases, qualified dividends are taxed at a lower rate than regular income, making them even more attractive. However, it's important to understand how dividends will affect your overall tax situation. Consulting with a tax professional can help you maximize your after-tax returns and avoid surprises at tax time. Not all dividends are created equal. Some companies may offer high yields, but if their earnings or cash flow are unstable, those dividends could be at risk. It's crucial to evaluate the safety of a company's dividend by looking at its payout ratio, earnings consistency, and industry outlook. The three stocks we've highlighted have demonstrated a strong ability to maintain and grow their dividends, even during challenging periods. Trying to time the market is notoriously difficult, even for professional investors. Instead, focusing on consistent investment in quality dividend stocks can yield better results over the long run. By staying invested and reinvesting dividends, you can benefit from compounding returns and ride out market fluctuations. This approach is especially valuable during periods of market cool down, when patience and discipline are key. Well-balanced portfolio includes a mix of dividend stocks from different sectors, as well as other asset classes like bonds or real estate. This diversification helps reduce risk and can provide more stable returns over time. The three dividend stocks we've discussed can serve as a strong foundation, but consider complementing them with other investments to achieve your financial goals. Regularly reviewing your investments is essential to ensure they continue to meet your needs. Keep an eye on company performance, dividend announcements, and broader economic trends. If a company's fundamentals change or it cuts its dividend, it may be time to reassess your position. Staying informed helps you make proactive decisions and protect your income stream. Compounding is one of the most powerful forces in investing. By reinvesting your dividends and allowing your investments to grow over time, you can achieve exponential growth in your portfolio. Even small, regular contributions can add up significantly over the years. This is especially important during periods of slow market growth, when compounding can help make up for lower price appreciation. Investors sometimes chase the highest dividend yields without considering the underlying risks. High yields can be a red flag, signaling that a company's dividend may not be sustainable. It's important to balance yield with safety and growth potential. Avoid putting too much weight on a single metric, and always do your due diligence before investing. Successful dividend investing requires a long-term mindset. Markets will have ups and downs, but by focusing on quality companies with reliable dividends, you can weather short-term volatility. Over time, this approach can lead to steady income and capital appreciation, helping you reach your financial goals even during market cool downs. Let's quickly recap our top 3 dividend stock picks for the 2026 cool down. A reliable utility company, a consumer staple giant, and a telecom leader. Each offers a strong track record of dividend payments, financial stability, and resilience in challenging markets. By including these stocks in your portfolio, you can position yourself for steady income and long-term growth. The investment landscape is always evolving. Staying flexible and adapting your strategy as conditions change is key to long-term success. Keep learning, stay informed about market trends, and be willing to adjust your portfolio as needed. This proactive approach can help you make the most of opportunities, even during periods of market cool down. There are many resources available to help you research dividend stocks and manage your investments. Financial news sites, company reports, and investment tools can provide valuable insights. Consider using portfolio tracking apps and setting up alerts for dividend announcements. Staying organized and informed will help you make better investment decisions. As we approach 2026, preparing for a market cool down doesn't mean you have to sacrifice growth or income. By focusing on high-quality dividend stocks, you can build a resilient portfolio that provides steady returns, even in uncertain times. Remember to diversify, reinvest your dividends, and keep a long-term perspective. With the right strategy, you can navigate the changing market and achieve your financial goals.